Hey everybody, Marcel Ernie Racing News, February 21st, 2023. I want to give everybody some information about what's going on in the housing market and specifically with people on variable rate mortgages and even so, people on fixed payments variable rate mortgages and what this means for the housing market. In fact, there was a poll about a week and a half ago where they polled calling all the Canadian citizens and several thousands to get an estimate and asking people who are on variable rate mortgages how long they can hang on before they pass the trigger point, or how long can they hang on after the trigger point has been reached where they're paying more interest than the entire fixed variable rate mortgage. So their mortgage is $1,700 a month, and now $1,700 of that is going to just interest because the inflation rate, prime, has gone up from 1.5 to 6.7%. And then they passed the trigger point, and now their $1,700 mortgage is actually $2,000 a month, all interest, and maybe $2,200 a month. And how long can they hang on and keep their house before having to put it on the market and sell it at a lower price than what they purchased it for? If they purchased it recently anyways, in the last year or maybe more, depends what happens and how many people have to sell. And 42% said they can't hold on past 9 months. So I'm giving everybody a heads up that if you have money and you're looking to buy a house, just wait another 4 or 5 months. Things are going to start to turn and you'll see the market turn. So let's get into the story about how it's affecting people. And let me show you a graph here. So here you have a mortgage. And it's a fixed payment, which means their fixed payment is at $1,700 in 24 on this graph. See, $1,724 fixed monthly payment on the top of the left there. Now, $1,101 is actually going to the principal back in January 2021 when people were on the 1.5% variable interest rate, the interest rate. And then $623 was going to the interest portion. So that's, it's a decent scale. And now you can see it carried right on to November 2021. And you can see again, now $1,118 went to the principal, even better. And then let's start going up the hill. All of a sudden now 704 is interest. 901 is interest in June of 2022. Now, 1,098 is interest and only 627 to the principal. And now August 2022, see the mortgage rates, the interest rate has been raised 8 times consecutively in just this past, from March 2022 until now. And so here is essentially when somebody reaches the trigger point. September 2022, mortgage interest rate is now at 4.5%. And then prime is 6.7. So interest portion is $1,786, when again the fixed monthly payment was $1,724. So now they're actually paying on top of their fixed payment variable rate mortgage. And as things continue to go into the future, now it's $1,900 in October. Now it's $1,982, and mortgage interest rate is at 5. And so when somebody is on a fixed monthly payment, that means they're trying to keep their payments fixed. They might have a fixed income, but now food is 30-40% more money. Buying products is 30-40 or 50% more money. Like if I want to go buy a hot tub now or a new truck camper, as an example, a Northern Light truck camper, a 10.2 like my truck camper, they used to be $50,000 to $55,000 new 2 years ago. Or 2.5 years ago, just as the pandemic was started, before all of a sudden the supply and demand of raw materials became nearly impossible to get. And now, if you go online, there'll be sale, $95,000, a 5% increase, okay? And so obviously that specific had to do with demand of people wanted campers maybe, but I don't see that demand there anymore. Not when all of a sudden people can enjoy and leave the country and fly everywhere. So the market now would be reversed a little bit. But anyway, so let's go read the article. So now that you guys understand the scale, and the trigger point is when you pass the 1724 right there. Okay. For most of 2021 and into early 2022, variable mortgage rates were substantially lower than fixed mortgage rates. As a result, many borrowers opted for a variable rate mortgage. These types of mortgages now account for about 1/3 of total outstanding mortgage debt, up from about 20% at the end of 2019. So 20% in 2019, now in 2022, more like 33% are doing variable rate. In Canada, about 3/4 of variable rate mortgages have fixed payments. Okay, so most of them are fixed payments. That's why they don't want a crazy variable rate mortgage. They want fixed. For these specific mortgages, when interest rates move, the amount of the mortgage payment does not change, but the portion going toward interest rather than principal is adjusted. But if interest rates increase substantially, these mortgage borrowers may reach a point where their fixed payments cover only interest and not any principal, as I showed you on the graph. The interest rate at which this happens is known as the trigger rate. If rates rise above the trigger rate, borrowers may then need to increase their mortgage payments to cover the additional amount of interest. For some households, this payment increase may be unexpected and not possible considering all the variables that people aren't getting paid more, but everything costs more to live. And your power bill, thanks to Trudeau, your food bill, all thanks to just inflation. In this note, we examine the concept of the trigger rates and discuss usually what happens if a borrower reaches the trigger rate. Let's take a read. Again, I'll talk about for a variable rate mortgage with a variable payments, the size of regular payments fluctuates as the prime interest rate changes. If prime rates go up, the mortgage payment increases to cover the large interest components. But on the fixed version, they're holding it down until it actually just becomes a non-fixed, because essentially you're going to pay whatever once it reaches your threshold. You're screwed. Now for this graph, we're going to kind of show how everybody on different mortgages when they started are reaching trigger rate, and they're all reaching trigger rate. So here you have somebody originally renewed in 2021, and at the bottom in blue, renewed before 2022. And you can see their rates of percentage, to 3.6 to 2.6 for, what is interest versus what is your payments, or your payment is 3.6. So as they start to go through the scale, now it's 80% of the payment is to interest. And we go through now 87, now essentially 91, 89, 88, 86% have at this point, which was just last year, have passed the trigger point, okay? So at the end of October 2022, financial markets anticipate variable mortgage rates will increase by another 50 basis points by mid-2023. In this case, an additional 15% of variable rate mortgages with fixed payments could reach their trigger rate, with the total thereby reaching 65%, or around 17% of all mortgages will hit their target rate, guys. Certain mortgages will reach their trigger rate sooner. Those that were originally or renewed in 2021, for instance, will tend to reach their trigger rates earlier, mainly because they were issued at extremely low interest rates and often with amortization period longer than 25 years. So also think about the prices of houses in 2021. They were at like a really high, and then we had an all-time high in 2022. So somebody who purchased a house in 2021 or 2022 at a ridiculous price, now you're going to have your 6.7% interest or more, and your trigger rate and your value of your percentage you're paying on such a $1 million house when it should only have been a $500,000 house, or you're paying on a $500,000 house when your house should have only been $200,000 or $300,000 because of this balloon gas. It's like a helium balloon prices of houses in Kelowna and a lot of areas of all of Canada. Guys, the simple way to look at it is right here. It says an interest rate of 1.5% would have a corresponding trigger rate of 4.2%. So when they purchased their mortgage, if they did it last year or a year before that, 2 years ago, even my friend TJ was saying 1.5% he got his variable rate mortgage at. Or no, he got a fixed mortgage, at 1.5% just 2 years ago. And so they could have been down to 1% even when people in variable 2 years ago. And now they've all reached the trigger point. So these people, it's already, interest is well above 4.2% now. So there's a lot of people on trigger rate already. Anyways, guys, this is Marcel with Ernie Racing News. In summary, again, if you're looking to buy some toys, side-by-sides, dirt bikes, jet skis, boats, or, some extracurricular housing, land, or anything like that, or you want to get a house, I think in 5 or 6 months, I think we'll see the marketplaces full of everything, because people want to hang on to their houses, so they're going to start selling their expensive toys. People who are financing toys as well will have to try to find somebody to buy out their financing, who is financing a boat. They're going to try to sell it and stop their financing. So maybe I'll be looking for a boat here, maybe. And again, apartments and all these things that people have on their side, and who knows if they can keep up with their mortgages. Again, rent rates might increase as well, but then the market will be flooded with more housing for rent, maybe. Who knows? Anyways, just giving you my opinion, guys. Thanks a lot.